Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Bitcoin has shattered the $78,000 support level, triggering a brutal $80 billion wipeout across the broader crypto market. This sell-off is not random noise. It is a structural reaction to two converging pressures. First, regulatory clarity from the Clarity Act has prompted institutional profit-taking. Second, geopolitical tensions in the Strait of Hormuz are injecting a risk premium into energy-linked assets. The market is repricing uncertainty. Meanwhile, artificial intelligence is amplifying this volatility. Algorithmic trading systems are executing impulsive sell orders at unprecedented speeds. The S&P 500 has dropped 1.2%, but the pain is concentrated in tech. AI-focused stocks have fallen 4.2%, exposing severe behavioral risks in portfolio management. When algorithms react to the same signals simultaneously, liquidity evaporates. Traders are now forced to confront the loser's game of market correction. Understanding this dynamic is critical for capital preservation. On the macro front, the official consumer price index data is misleading. While headline inflation appears manageable, underlying sectors are screaming. Healthcare costs and energy prices are posting double-digit spikes. These hidden inflationary pressures are forcing the Federal Reserve to hold its benchmark rate steady at 3.64%. The disconnect between official data and consumer reality is widening. This divergence keeps rate cut expectations at bay. In related news, the crypto ecosystem continues to evolve politically. At ETH Prague 2026, the micronation of Liberland honored Ethereum co-founder Vitalik Buterin with its highest state award. This gesture signals a strategic push for on-chain governance models. Despite having zero sovereign recognition, Liberland is leveraging blockchain technology to assert political influence. It is a bold experiment in digital sovereignty. Looking ahead to today's release, China's economic data will dictate global risk sentiment. At 2 o'clock Universal Time Coordinated, investors will watch industrial production and retail sales. Industrial production is forecast at 5.5%, down from 5.7%. Retail sales are expected to rise to 2.2%, up from 1.7%. These numbers will confirm whether China's stimulus measures are gaining traction. A miss in industrial output could trigger another wave of commodity selling. Despite the current turmoil, historical data offers a counternarrative. CoinGecko analysis of 4,753 Bitcoin price observations reveals a distinct pattern around U.S. federal holidays. The Santa rally is not just a myth. Data shows a 0.77% next-day return following holidays. This figure is 4 times the baseline return of non-holiday days. Seasonal liquidity injections often provide a floor during periods of high volatility. The market is currently caught between geopolitical fear, algorithmic amplification, and hidden inflation. Bitcoin's drop below $78,000 is a stress test for the entire digital asset class. AI-driven volatility ensures that corrections will be sharp and swift. Investors must distinguish between structural shifts and temporary noise. The coming hours will be defined by China's economic output and the Fed's silent stance. That's your market briefing. Follow Rumour with AI for daily market intelligence.